Okay, welcome to this webinar. FXStreet Signals will be introducing a new product today. Thanks for coming. I will try to be brief in this presentation. First of all, my name is Gonzalo Moreira. I've been working on this behind this product on the architecture of the signals. I've been also active in the mentoring group, in the Telegram group we used to chat with our members, and I will structure the presentation in 4 blocks so you get an overview what it is about. If possible, we will make brief pauses for question and answers after each block so we can engage in some conversation. Okay? Yeah, we might have a little bit of echo today. I will try to get closer to the microphone so to avoid too much of an echo. So let's start. Our first block will be dealing with the trading philosophy we use in this product. Okay, one of the axioms we follow here is to think big and trade small, and by that we differentiate perhaps from other signal providers or generally speaking from other trading approaches where you, so to say, bet the house on a single trade, go for it, close the trade, and move on to the next. Here, we adopt a slightly different approach in that we think small, trade small, so to say, in small amounts, thinking big in the longer term result of our trades. Usually, we will get into volumes and leverages later on, but our idea, generally speaking, is to have a lot of positions, a lot of trades, so to say, with little sizes running at the same time. These positions are always in the market, or make us be always in the market with some kind of positioning. Yeah, and we don't let any of these single trades be as big as a potential threat to our account, to our equity. Okay, we prefer to give little volume to each trade, let the market do its thing, let the market prove our stance right, and do not bet on a single trade too much, or do not put too much expectations on single trades. Okay, so in the end, we execute a lot of signals. We have an average of 4 trades per day, more or less, but we monitor the entire portfolio. Besides of monitoring trades, yeah, we try to monitor the entire portfolio, and we'll see later a few details on that, a few interesting things. Okay, so this is a service where you will be continuously in the market with open trades. The average duration is more or less at 2 days per trade, but there are a lot of differences between the systems we use. There are long-term systems which can hold trades for weeks and months, and the majority of signals are closed, if not during the same day, within a few days of the open. Okay. But in general, there are always some kind of open positions floating, and that is the portfolio we refer to often in the chat room, which we are monitoring accordingly to our view of the market. And to sustain that positioning in order to explain the individual entries and exits, how we manage them individually and collectively. We explain a lot of things in the chat room. The chat room is part of the service. This is where you, one of the venues to receive the signals is through a closed or private Telegram group. And there you receive a lot of inputs and with an educational layer explaining not only the rationale behind a particular signal or a particular bias or directional bias or positioning, but also deeper explanations on mechanics of the Forex market, hints on intermarket analysis, how things are calculated, the peak value, the effective leverage, these basic stuff we cover a lot, but we also explain how we use the indicators, how we transform observations into trading strategies, and the whole logic we try to transmit, how we analyze markets from a technical perspective, from a macro perspective. And we give a lot of educational inputs so that you can learn as you go. So it's not a pure signal service in that sense, but you have a lot of commentaries, of analysis. We use a lot of tools taken from FXStreet.com, tools that you will see throughout the site, and we teach how to use those tools, those pages, the information, how to classify, to make an idea of what the market is doing, how to generate trade ideas ahead of the crowd, scenarios, possible scenarios, and so on. So this is the tuition part. I don't know if there's any question. We are talking still here in general terms. If there is any question, you can drop it here in the question and answer. If not, we will move into the second block. Okay, to the system's anatomy. Here we will explain a little more in detail how we structure the signals, what kind of architecture is behind them. Okay, so we use a multi-strategy approach. That is, there are lots of strategies running at the same time, and each strategy is capitalizing on a particular setup, on a particular pattern. And one of the results by using multi-strategies is the fact that you may have strategies going against each other at some point. Okay, we use multi-pairs. That is, we trade a wide variety of crossings. Only Forex at the moment. We do not do trading in other related markets such as commodities, equities, and so on, cryptos, but we do include them into the analysis, because sometimes the trigger for a movement that is manifested in the Forex market has its origin in another market, in equities, in commodities, or in several markets at the same time, and they are reflected in the Forex market. That's why we include them in the analysis, but we don't trade them directly. But we do trade a lot of crossings, not only euro-dollar, sterling, and the most popular, but also non-dollar crosses. We do a lot of them. We try to exploit the opportunity in these pairs. If you are quite new to trading, you perhaps have, there are perhaps pairs you have never traded, or you are afraid of trading because they have higher costs, such as spreads or commissions or swaps. We pay attention to that, but we are still of the opinion by observation and experience that a lot of opportunity is to be found in those pairs. A lot of crossings are in fact synthetic pairs, which are staging a movement as a result of what major pairs are doing, and in that way you can find a lot of opportunities. They are not as efficient as an euro dollar or dollar yen. That is has a lot of liquidity, a lot of robots and human brains looking and analyzing it. Cross pairs are slightly hidden behind the majors and offer also very nice opportunities. So we have this multi-strategy applied on multi-pairs, and this results in a wide variety of combinations, okay, that we are constantly exploiting. Some of the strategies may have only 2 or 3 trades per year in a certain pair. But all of them are tested, all of them have an edge, a statistical edge over the market, and that's why we are running them on a wide variety of pairs. And this combination of multi-strategy and multi-pairs and has also a combination of time horizons. Okay, so single strategy may be long a certain pair. For the short term, it has identified a short-term pattern, and at the same time, we may have another strategy going in the opposite direction with the same asset, with the same cross, yeah, because it has a different time horizon. Okay, that is, a certain strategy may be long, the Australian dollar against the yen, for example, and it has a time horizon of days or weeks. And the next day, we receive a signal going short that pair for a few pips only during 2 or 3 hours. So this combination of several strategies in both directions may result in having sometimes some pairs hedged in the market. And hedging is something we exploit with our system, and it's something that you should be aware. If you adhere to this program, you will need some kind of hedging facility in order to be able to handle both legs at the same time. Okay, it's not that we are 100% hedged at any time. Okay, our hedging is usually only partial. We normally adopt a clear directional bias, but in between we may trade in the opposite direction just for the capture of smaller portions of that price path, so to say, exploiting the typical oscillations seen in many currency price charts. Okay. As for the statistical results, we do have, let me show you here. When you are new to the group, you will be taken to a page where you can see the results collected by an external source, in this case, my FX book. Okay, let's see, here is the This is the demo, and here's a real account. We have a real account running since September, more or less. Okay. This is the way MyFXbook shows the results. We have in red the balance curve, in yellow this is the equity. Don't mind here the spikes in the equity curve. This is something that is particular of MyFXbook, but this is the path we have been in since September. We have been risk-off oriented since summer, and we didn't change views after summer because of well, the analysis we had at that moment. So we had to endure a certain drawdown, which is now being recovered. Our drawdown is right now the floating drawdown at minus 3.23%. Overall, there are lots of trades done. You see 430 approximately since September, so we have it's a quite intensive type of trading. And we have the win rate about 50%. This is the win rate we have historically shown around the 15 something percent, where we try to become better, and it's in the profit factor, so that it's always above 1. That is, when you win something more than you lose, so that in the end you can achieve consolidate the gains. Okay, so this is the overall statistics, and here is this is the portfolio where all the strategies are included, but we do have some strategies that work better than other in terms of performance, and that is also a choice you can make. Let's say you say, well, I like the multi-strategy approach, but I prefer to use only short-term strategies, or I prefer to use a strategy with a higher win rate than just 50%. I would look into 60, 70%. We do have strategies or combinations of strategies in certain pairs which measured in real terms and with a real track record have higher statistical performances, and in that way you can say, okay, I will only follow a certain group of strategies, not the entire portfolio, but still I will learn from the overall approach, how the ideas are generated, how it is explained, the why we adopt certain directional bias, and also the timings. We'll come to the timings later. And just to finish the systems anatomy, maybe you want to have a look inside to the way we program the systems. Okay, we use, this is the software we use. The strategies are programmed. Okay, this is a drag and drop type of platform where we draw the logics for the strategies, and from here they are back tested and they are moved into production later in real time in the real market. Okay, this is the way we program the strategies. They are quite complex. We have strategies here which have a lot of layers of complexity. For instance, this is a strategy we recently added to the portfolio. Here's the complete logic, you can see. Okay. I'm not going into details here, but just for you to see the complexity. We have layers and layers of logics within other logics, so that in the end, some of these strategies are doing a lot of calculations per period, be it per minute or per hour or per day, but in some cases up to 1,000 calculations each period. So they are programmed to detect very particular and yet flexible patterns in price charts in a way that we couldn't be doing without using these automation levels. Okay, so that isn't to say that we are always 100% automatical on automatical mode, but this is something I will explain in the next block. If there are any questions related to what we explained so far, please go ahead. Otherwise, we move to the next block, to the third block. Okay, so here we come to trading. The execution part of the trading, the execution is done on our side automatically. That is, the signal goes through, the signal is received by our members through the Telegram group, also through the signals page. You can have a look here to the how the signals page looks like. These are the chips where open trades can be seen, and also the recent closed trades can be seen here in green or red, depending on the result. And in yellow, these are the open trades for the moment. Okay, you see the date and hour of the open, the execution open, and the price level at which it was executed. And if it is running or closed at a loss or a win, and the amount of pips achieved. Okay. On our side, this is done 100% automatically. That is, if the signal appears here, it will appear also in the chat room in the form of a box, a message box like that one here. If it is a close, or if it is an entry, okay, this is an entry signal, this is a closed signal. It tells you the trade ID, which can be seen also here in the chip on the signals page. Prepare the direction, okay, and it points you to the page here I have here behind, to the signals page. Okay. This is the way the members receive the signals, and the way you execute the signals is probably manual on your side. So you take the signal and you have the choice, if you wish, to execute and mimic the same trade as we are doing. Okay. Usually we we give a rationale and explanation for the signals for each trade, contextualizing the new entry in the market, and we do it also for exits. The exit can be automated. It can come from the system itself, or we can manually close the trades. We have a manual control over the signals. We apply the discretionary layer on top of the automatical execution. Okay, and this discretionary layer consists not only of managing the trades upon the open, but also the control we execute on or by switching on and off the signal strategies. Okay, so we are risk-on oriented, and we would like to, let's say, to sell Japanese yen. So we may switch on all those strategies we believe that can engage in a meaningful entry right now selling Japanese yen. And we can, on the other side, shut down all strategies which are buying the yen. And in that way, we apply a human and discretionary layer on top of the signals. Otherwise, they would be producing trades all the time. So we use the execution here not as an end in itself. We don't rely 100% on the robots. We do choose them because they have proven to have an edge, statistical edge, but we later on we try to enhance their effectiveness by switching on and off the robots. Okay, and this discretion is based on our analysis, and that analysis is usually of a macroeconomical nature. We analyze a lot of themes that are affecting the market at a certain moment. And to do that, we also rely on tools that we have at FXStreet. For instance, we have here on our analysis section the sentiment page, and in this page you can find for each of the assets or group of strategies, you can look for bullish and bearish arguments or themes that are affecting the market. You can click here, read about the idea, and here you have everything classified in bullish and bearish ideas, which we use to generate ideas. So part of what we apply in this service comes from a macro analysis. This gives us a directional stance, and a lot is based on big macro topics. Okay. Besides, we also use cycle analysis, also based on an array of dedicated contributors we have at FXStreet, which work with different cycle analysis techniques, and we use them to fine-tune our entries and exits, to fine-tune that discretionary control we apply over the automated systems, and in order to know in anticipation, if possible, when to switch on and off certain strategies, how to maintain a floating loss that is eventually going against us, just to have a limit date until we can see a potential relief of that floating drawdown and the market going in another direction. So we are not lost in time when it comes to trading. We do have or follow to a stop that is 100 pips away, to a stop that is just 50 pips away. 50 pips away, the probability and the chances for that stop to be hit are much higher. So why to give the same risk to different stop length? This is something we try to explain also in our mentoring, in our tuition in the room. Okay. Another brief topic here, when it comes to position sizes and stops, we are often asked about why many strategies do not include stops within the entry. And the reason is because our automated systems, they use many times the so-called conditional stops. Conditional stops are stops which are not fixed as a price level at the moment of the entry, but are rather calculated on a continual basis by the system. So the system may say, I go long if I see a certain pattern near an oversold oscillator area, and I cancel or I exit the position in profits if that oscillator crosses its central line, for example. So we don't know at the moment of the entry which price corresponds exactly to that signal triggered by the oscillator crossing the middle line. We can more or less anticipate by knowing the nature of the strategy, and it's something we inform in the group, but we do not always have a stop set at the beginning of the trade. Not all positions. The majority doesn't know the stop before or at the moment of the entry. But that does not mean that the trades don't have stops. They do have, but by following the signals, you have to be somehow on your toes to receive the exit signal and execute it in time. Okay, just to mimic the same performance as we have. Okay, I think that's all. These were the most important topics we wanted to cover, introducing you to the product. Just as a quick information here, the signal service is located in the menu bar from any part of the site. You can click on signals. If you are logged in, as I am already logged in, you will see this page here which I have shown you before. There is also a frequent asked questions blog where a lot of questions which I've been covering here in this presentation are answered. And you can also, for each of the strategies, you can also see the explanation on that particular strategy. As you see, there are a lot of them, and each one has a different logic, or at least several of them. We have groups and families of strategy which share the same logic, but apply them to different time frames. But in any case, the explanations can be seen here, and also in the chat room, which you can gain access to by join here the mentoring group. You will get access to this group here, okay, where we provide all the rationales and the tuitions and comments and analysis and quotes and tools and so on. This is the place, and where you can also ask us questions, doubts, and things that you are considering at the moment. You may drop us a message at any time here. Okay, so thanks a lot once again. If there are no questions, we would leave the presentation now, and we will repeat this webinar in the next weeks several more times, so that if you have questions at that time, you are welcome to come and visit us again. Thank you very much. Bye-bye.